Okay, let's start with the basics. Cryptocurrency. It sounds like something out of a cyberpunk novel, but it's real and it's making waves, folks. In the simplest terms, think of cryptocurrency as digital money. No physical coins, no bills, just lines of code. The OG cryptocurrency, the one that started it all, is Bitcoin. Created back in 2009, Bitcoin introduced the world to the wild world of blockchain technology. Think of blockchain as a giant digital ledger, like a massive Excel spreadsheet that keeps track of all Bitcoin transactions. It's spread across countless computers worldwide, making it almost impossible to hack or manipulate. Now, why are people so excited about digital money? Well, cryptocurrencies offer a bunch of potential benefits. Think faster transactions, lower fees, and increased financial privacy. Plus, there's the whole decentralization thing. With traditional currencies, you've got governments and banks calling the shots. But with crypto, it's all about peer-to-peer transactions. No middlemen, just pure digital exchange. It's like the Wild West of finance. But instead of saloons and dusty trails, you've got memes and online forums. And just like the gold rush back in the day, everyone's hoping to strike it rich. But as with any gold rush, there are risks involved, and not everyone comes out on top. Alright, let's talk about one of the most compelling aspects of cryptocurrency: financial inclusion. Now, I know what you're thinking, John, this sounds boring. And you're right, it does, but stick with me because this is actually kind of important. See, billions of people around the world don't have access to traditional banking systems. They're completely shut out, no bank accounts, no credit cards, no way to participate fully in the global economy. That's where cryptocurrency comes in. With just a smartphone and an internet connection, people in even the most remote corners of the world can access financial services. They can send and receive money, make purchases, and even save for the future, all without needing a bank account. Pretty neat, huh? Think about it. Farmers in rural India can get paid directly for their crops. Refugees fleeing conflict zones can access their funds safely and securely. It's like giving financial superpowers to those who need it most. Of course, there are still challenges to overcome. Not everyone has a smartphone or reliable internet access, but the potential for cryptocurrency to empower the unbanked is huge, and that's something worth paying attention to. Let's be honest, sending money internationally can be a real pain in the you-know-what. High fees, slow processing times, and paperwork galore. It's enough to make you want to just stuff your money in an envelope and mail it yourself. But hold on to your horses, because cryptocurrency might just have the solution. Remember how we talked about crypto being decentralized? Well, that means it doesn't care about borders. You can send cryptocurrency to someone across the world just as easily as you can send it to your next-door neighbor. No more waiting in line at Western Union, no more exorbitant fees eating into your hard-earned cash. It's like having a universal currency that everyone can use. Imagine the possibilities. Of course, there are still some kinks to work out. Exchange rates can fluctuate, and not everyone accepts cryptocurrency yet. But the potential for faster, cheaper, and more efficient cross-border transactions is definitely there. Hold on to your hats, folks, because cryptocurrency isn't just about digital money, it's sparking a whole revolution in the world of finance, otherwise known as fintech. Think of it like the Wild West, but instead of saloons and gambling dens, you've got startups and venture capitalists throwing money at anything that moves. It's a chaotic, exciting, and sometimes terrifying landscape. We're talking about everything from decentralized lending platforms to prediction markets to non-fungible tokens, NFTs. Don't ask me to explain all of that right now, because frankly, I'm still trying to wrap my head around it myself. But the point is, cryptocurrency is pushing the boundaries of what's possible in finance. It's forcing traditional institutions to adapt or get left behind. And who knows what kind of innovative, world-changing applications we'll see in the years to come. It's going to be a wild ride, that's for sure. Okay, let's address the elephant in the room, or should I say the Bitcoin in the blockchain. Regulation. Governments around the world are still trying to figure out what the heck to do with cryptocurrency. It's like trying to fit a square peg into a round hole. The existing financial regulations just weren't designed for something as decentralized and borderless as crypto. Some countries are embracing cryptocurrency with open arms, while others are cracking down hard. It's a real mixed bag out there, and this regulatory uncertainty is causing some serious headaches for businesses and investors alike. Will governments try to control cryptocurrency, or will they let it run free? Will we see a global regulatory framework, or will every country do its own thing? Only time will tell, but one thing's for sure, the regulatory landscape is going to play a major role in shaping the future of cryptocurrency. One of the biggest criticisms leveled at cryptocurrency, especially Bitcoin, is its volatility. And let's be real, it's a valid concern. 1 minute, Bitcoin is soaring to the moon. The next minute, it's crashing back down to earth faster than you can say Elon Musk tweeted again. This kind of price volatility can make it difficult for businesses to accept cryptocurrency as payment and for individuals to use it as a store of value. I mean, who wants to buy a cup of coffee with Bitcoin when its value could plummet by 10% before you even finish your latte? But here's the thing. Volatility is kind of the price you pay for decentralization. See, with traditional currencies, you've got central banks manipulating interest rates and trying to control inflation. But with cryptocurrency, it's all about supply and demand. And when you've got a limited supply and a whole lot of hype, well, things can get a little crazy. The good news is that as the cryptocurrency market matures and more people adopt it, we should see volatility decrease over time. But until then, buckle up because it's going to be a bumpy ride. All right, let's talk about the elephant in the blockchain, or should I say the scammer in the Discord server, because let's be real, folks, where there's money, there are shady characters looking to make a quick buck, and the world of cryptocurrency is no exception. We're talking about everything from phishing scams to Ponzi schemes to good old-fashioned hacking. Remember that whole decentralization thing? Yeah, well, it makes it really hard to track down the bad guys when things go wrong. And things can go wrong, folks. We've seen exchanges hacked, wallets drained, and people losing their life savings to elaborate scams. It's enough to make you want to just bury your money in the backyard and forget about it. But don't despair. There are things you can do to protect yourself. Be wary of anyone promising unrealistic returns. Do your research before investing in any cryptocurrency project. And for the love of Satoshi Nakamoto, use a secure wallet to store your digital assets. Remember how we talked about governments trying to figure out what to do with cryptocurrency? Well, El Salvador decided to just go for it. In 2021, they became the first country in the world to make Bitcoin legal tender. That means you can buy your pupusas and pay your taxes with Bitcoin. It's a bold move, folks. Some might even say reckless. On the one hand, it's a fascinating experiment in monetary policy. Could this be the future of money? Will other countries follow suit? Only time will tell. On the other hand, there are concerns about Bitcoin's volatility and its potential to destabilize the economy. Plus, not everyone in El Salvador has access to the technology needed to use cryptocurrency. It's a gamble, that's for sure. But hey, sometimes you got to break a few eggs to make an omelet, or in this case, maybe a few Bitcoins to revolutionize the global financial system. While El Salvador is embracing decentralized cryptocurrency, China's going in a different direction. They're developing their own central bank digital currency, CBDC, the digital yuan. Think of it like a digital version of their existing currency, the renminbi. But instead of being controlled by commercial banks, it's issued and controlled by the Chinese government. Now, this raises a whole bunch of questions about privacy and government control. Will the Chinese government be able to track every single transaction made with the digital yuan? Will they be able to censor certain transactions or even freeze people's accounts? It's a concerning thought, to say the least, but it also highlights the potential for CBDCs to reshape the global financial system. Will other countries follow China's lead and develop their own digital currencies? And if so, what will that mean for the future of money and individual freedom? So after all that, where does this leave us? Will cryptocurrency revolutionize the global economy and usher in a new era of financial freedom? Or will it go the way of the dodo? Just another tech fad that couldn't quite live up to the hype? Honestly, folks, I don't have a crystal ball, but one thing's for sure, cryptocurrency is a force to be reckoned with. It's already shaking up the financial industry and forcing us to rethink the very nature of money. Will it succeed in its most ambitious goals? Will it replace traditional currencies and become the dominant form of money worldwide? It's impossible to say for sure, but one thing's for certain, the future of money is going to be very interesting.